All right, good morning, members. It is November 2nd, and this is the weekly review. And if we look at the markets and think back about what has happened here, it's been a pretty amazing run. From this breakdown in here, then the big break here, the plunge, right? High volume spike, the washout that we kind of expected. Then the ideal of some sort of a range trade developing, maybe, from this low initially back up to the retest regen zone. And then we had to expand it and say, oh, well, it's probably going to go to these highs right up into here. And now we're all the way back up to the very top, and in some cases, over the top. You have to look at this spectacular run back up and say to yourself, wow, they did it again, because they certainly did. If we look at the ending numbers for the week, 2 weeks now of 3-4% plus gains across the board in all the majors, taking us back to the highs and over the highs in some cases. Big spectacular gains again. Russell leads again. That's 2 weeks in a row now as the money pours back into the market on the long side and looks to take things higher. The thing that's most apparent to me, or actually, to most probably, and I've kind of, jotted it down here in the notes, and you can look at it if you want to in more detail. But it's this whole idea that, trading's difficult. It's not easy, and because you can be right and still be wrong. And I kind of want to just take a few minutes to kind of just think back about what happened here, right? Because if you remember, when this S&P was still up in this area, we were talking about, okay, this might be a top. And when it got into this area, we said, well, it probably is a top. And we started getting rid of all of our long trades, if you remember. We got down to nothing but Whole Foods, if I remember right. And we got out of all those trades, before things broke down. Then, of course, it did break down. We got the plunge lower. And then we saw this as a washout. And we thought, okay, it's going to set up a range trade. So, we were correct in that assumption again. And then as it started to range trade, if you remember, we got those not here, but in other sectors and in other indexes. We actually got those retest regenerate zones, where they had set up, and we went back over them. We didn't trade back down. Instead, we went back up. And when we saw that, it confirmed the idea that this is a range trade. And so it was at that point we decided to put on some exposure. We decided to get out of what little short exposure we had. Yet, we didn't move fast enough, because instead of giving us any kind of retrace, as you know now, right, this thing just the last 8 days or so has just been straight up, off the bottom. And so even though in 3 of the 4 cases, we were pretty correct in terms of our positioning, our thoughts, our expectations, we missed this last key piece, right, which is a straight up move off the bottom. We expected a range trade to here, maybe a range trade to there. There was no range. It went all the way to the top, and we're not even probably going to get a range trade off the top because we've got breakouts elsewhere. So even though you're right, you can still be wrong in that you're still not positioned correctly to take, maximum advantage of what's taking place. And that's definitely what has happened here. And, it's frustrating to say the least, but it is what it is, right? It's the power of the central banks reinforced, once more. So, in summary here, yeah, we were pretty correct, but boy, we missed the last big call, and it's cost us, because we don't have enough exposure on. If I look forward and I ask myself, okay, what do we got to watch going forward here? The strength of any, the strength or actually not of, but or the strength or weakness of any move really is how the retest regenerate sequence behaves once it occurs. And so, if we go back here and I pull up, some other charts, for example, if we bring up the, maybe the IYT was a good example. When this thing broke out and broke over this swing point high, and let me get my, so there would have been a retest regen here. It happened immediately, regenerated higher. If we look at the next swing point high, right, that was this one. Again, it immediately retests, regenerates, or attempts to regenerate. This was the only one that actually closed under it, but it was only for a bar. So right now, this one also, usually you want to see at least one extra bar after it breaks. In this case, tries to regenerate lower. It doesn't get it. This is saying it wants to go higher still. And if we look at the stronger ones, for example, remember we were watching the IBB. The IBB never even came back to do the retest. The breakout's here, and there's no retest regen. It's multiple swing points breaking, just skyrockets higher. If we look at, we could go down the list. There were several, like the XLF. XLF comes over a swing point high. The first thing we watched, of course, was the bearish retest regen, which is what told us we were in a range trade. So we break out here, we close lower, and then the next bar we're over it, and then we're up, and away. Now we get another retest regen here. It's a bullish one, but we never even come back to test it yet. We're about to try to break the top, and that's the case in almost all these now. In that situation, if we break out, the real test, if this does continue to extend here, the retest regen back into this area that regenerates us higher, if that's what happens, that's the key test. It's this test, right? It's this regenerate test. That's true here, that tells us it's a range trade at worst. It'll be true here, which will also tell us that it's a range trade at best if it breaks lower. If it doesn't, then what do? We have to expect higher prices. And right now, everything we look at, despite the fact that this is extended beyond comprehension in the short-term time frame, because folks, this kind of a move, and what I mean by a move, I'm talking about the angle. That sort of an angle is unsustainable. It just can't be sustained. Now, that doesn't mean it can't go another bar. Can't go a bar after that. Can't go a bar. It can do 4 or 5 more bars. It doesn't. There's nothing that says, okay, because it's so stretched, it's guaranteed to come back. There's nothing that tells us that. Never. It just tells us it's overbought and at some point it will. But it doesn't tell us when. And when, of course, as we know, is the key. So when I look at these markets, and I look at these, going forward and ask myself, what's the key? It's really the strength or weakness of any move is based off that retest regen. So once we get those, and we see them, and we have, which has told us this thing was going to extend higher the range, but now it's actually breaking out. And what I mean by breaking out, we'll look at the NDX here in a second. There's no indications that this wants to come back in, at least yet. So given that, we have to assume this thing's going to continue to extend, whether it gives us a small pullback or not. I'm sure it will at some point, but whether it does it immediately or not, that's up to the market. And right now, fundamentally, as you know, we've got this huge central bank interventionist policies that are driving this thing. We've seen it before. We've seen it multiple times now over the last 3-4 years where central banks come in, and no longer is it to quote-unquote save the world. It's to juice the world. I mean, that's what we're doing now, is we're juicing things. Japan juices the markets on Thursday night. You know, the markets were set to do a sell the news off the Fed. Doesn't happen. Because the Fed actually, as you know, right, it had pulled back, finally finishes up the QE, although they have maintained, you know, their current policy of low interest rates for foreseeable future. We've got other central banks now, you know, stepping in. Now, if you look at these, you know, if you look at what this means when you get these central bank interventions, it's competitive currency devaluation. I mean, that's what it is, right? The yen is going to get hammered, and did, as a result of this action. And so if we look at, let me pull up the charts here, and let's look at the yen together. You know, if we look at the yen, and you know it from the dollar trade that we put on, but if you look at the yen absolutely got toasted. Right? I mean, you know, it got a bounce, and I fortunately, personally, had bought some here, or not bought, but sold some short through a different instrument, which is why I was watching the dollar trade, which we got into. But, I mean, it spikes under the low here, volume's huge. This thing's going much lower, and if I pull this back, put it on a monthly, you can see the trajectory here. I mean, it's down. It's just down, down, and down. And we're talking about those retest regen zones. You know, if you pull them up here, you can see just how weak this is. You go under, you come back up, you're doing a retest for multiple, and we're on months here, multiple months. You can't get higher. What do? You break lower again. This is going to be the retest regen zone when it finally retests again. But you know, these things can go a long time without a retest if they're very weak. For example, look back over here. Never even retested. Got close right here, but not quite. That's how weak this is. This is going to go much lower. When you have that situation, this competitive devaluation of a currency, you know, that puts pressure on other currencies and other countries. So if I go in here and I look at Japan, and let's look at the Nikkei, you can see the huge spike up. And I'm on the monthly. You can see this huge spike up right back to the top. You know, this thing is setting up for a big breakout. And that large breakout, well, not setting up, it actually is breaking out because the month just ended. That breakout, if you project it, right, is about the same distance. So this is a big move. And as much as I hate to, I'm seriously considering buying into this because it's had a long consolidation, and now it has the potential for a large move even higher. That's competitive devaluation working for you. Now, if you go over to like the main competitor to Japan, you know, the one that gets hurt the most, it's, let me see, what is it, KS11, I believe? Let me see if I got it right. It's the KOSPI, right? The Korean index. Yeah, it's okay, but this is a different picture than what you saw. And if you pull this back and put it on the daily, Japan was up 5% on Friday. This thing was up 0.28. These guys are getting hammered as a result of the devaluations working against them, not for them. And so, you know, this whole devaluation forces other countries to do the same, or they're going to have their exports suffering. So the Koreans are going to have to lower their interest rates, or maybe even do their own QE program, you know, to make their currency competitive again, which does what? Well, if you devalue your currency, you're importing inflation into your country, right? You're necessarily doing that. And some of these countries don't want to do that. So they're kind of forced with either becoming more stagnant in their economic growth or importing inflation into their countries by competitively devaluing their currency. It's a never-ending game here. It reminds me of the Smoot, what was it, Smoot-Hartley, I think it was called, or Hatley, the tariffs back in the 30s. It's the same situation, right? And you're going to see other countries, Europe being the next one probably, pressured, as well as China, to stimulate more. If they do that, what does that do to the equity markets? Well, it pushes them up, because now, you know, the currency's cheaper, which means you need more currency to buy the same thing. This also is probably going to force the Federal Reserve, you know, they'd already said they were going to hold this huge balance sheet and reinvest it versus allow those bonds and, you know, instruments they had bought to expire. They just, as they expire, they reinvest them, so they buy them again. But they've also got this considerable period of time before rate increase language that's still in there, hasn't changed, which of course is helping to juice these markets as well. The other fundamental thing, big thing that's happening is domestic earnings. You know, if you read the numbers here, you know, they haven't been bad. They've been good again. And it continues. And you know, the strong dollar hasn't taken a big effect on these multinationals, at least yet. Maybe that happens in the first quarter, but so far it hasn't been an issue. The other thing that really was fundamentally unexpected, certainly by me, was there was no sell the news reaction, which just reinforces how strong this move is. You know, you were extended, you came into a well-known event, which was the Fed ending QE, yet we didn't sell off, and then of course we got the juice out of Japan as a result. On the positive side, technically, you know, there's a lot of bullish breakouts right across the board. You know, if we pop over, come into our resources here, look at the current trends. These guys, well, actually, am I logged in? I got to log in first. You know, most of these trends have all turned bullish again. So if we pop in here, look at them, you know, our trends, almost all of them are back to bullish. And those, in some of those cases where they're not back to bullish, it's because it moves so fast you couldn't even set a swing point up to break. That's how violent the move back up has been. And so, you know, fundamentally, strong moves, technically strong moves as well, reflecting that. These projections for these breakouts are large, and let's take a look at the NDX. Matter of fact, I actually pulled up and did a markup here to use this morning. If I look at the NDX actually broke out this week with this huge move that took place. If I look at it, and let me grab a pointer here. If I look at the worst case projection, right, which would be these smaller ranges that have broken here, these ranges are large. I mean, they're not small. If I take the numbers and just look at them, I mean, this projection up still takes us up to about almost 40.98 is where we were, so it takes us up to about 41.98, which is what, another 40 points, a little less than about 30 points. If I do the larger projection, which is these larger ones, you know, this would take us up to almost 43.28. So, I mean, we're trading at, you know, 41.60 or so. So we've got huge numbers still in front of us, given that this thing now has broken over. You can see the break here is broken over. It is no range trade, and we see this in multiple sectors now and in two of the indexes. They want to go still higher. You know, there's no stopping this juggernaut technically at this point. I know it's oversold, I mean overbought. I feel it difficult to buy here, but when I look at this and I look at what it's doing, it just looks like it's going to go even higher, as much as that's counterintuitive to what you and I might think. So technically, you know, very strong. If we look at the world markets, and now this, if you remember, this is where the weakness has been, and I suspect in time, it's going to happen again because of the currency moves. But right now, with what's happening and with this, surge forward, even these weaker countries are now starting to see a change in the way their indexes look. And so let's just quickly review here. For example, if I take a retest regenerate bearish off the German DAX, remember it got over it, held over it, looked like it was going to come back, did the retest, and then what? Surges forward. So here you actually have a confirmation that at worst, this is a range trade. Where can this range trade go? Well, it can certainly go up to this area. It may even go back to the highs. I mean, world markets, and this is just one example, and it's pretty much true across all of them, they've all gotten better. They're not nearly as bad. Now, I suspect what we saw before, where we saw deterioration in these world markets, and I believe it was a result of currency, volatility, I suspect that's going to come back again. But for now, it's up and away. And I don't see anything to change it. So world markets, other than Japan and India, they had been weak. Certainly we're seeing a strong surge now across all the world markets being pulled higher as a result of, to some extent, the fundamentals, but more so, the economic fundamentals of the central bank intervention. So I don't see anything there to stop us. If I look at what's coming up, we got a lot more earnings. That's going to continue. Earnings, as I pointed out before, and you can read the details in the notes, they're better than expected on average. We've got the beginning of the month, so there's lots of PMIs, ISMs. We've got Bank of England, ECB on Thursday. To some extent, that may end up being a sell the news because it's probably going to be hard for the market to sell off in front of that news. So we may get another extension now for 3-4 days before we get that news. And if ECB does anything unexpected that's more easing, we may see even more surge. It's that crazy. So those are the big things. Of course, unemployment numbers on Friday. So a lot of data again. Geopolitically, it just doesn't matter. World's in a mess. Nobody cares. So what's the bottom line? Last week I was wrong on this whole range trade idea, unfortunately. And the market at this point has broken out several sectors, two of the 5 indexes. And I actually didn't go over those, but we could real quick. You got the, let's just quickly take a look at these. Actually, I didn't want to go to Japan. Japan's on my mind, as you can tell. I want to go to, so the Dow Jones hasn't broken out yet. Here's the Dow, but the Dow, actually, I take that back. There's 3 of the 5 that are broken out. The Dow has broken out. It's over the top. And these are all suspect because there was huge volume up there. The NDX we just looked at, the NDX has broken out. And if I can get the symbol in right, the NDX is broken out. It's over the top. And bear with me, here we go. So here's the NDX, breaks over the top, right? Suspect breakout, less volume. The NASDAQ composite has broken out. So we have that one also over the top. And now the Russell, which had been the weakest, that one's coming up to the top as well. So it's broken multiple swing point highs on the way, and it's coming up to break them again. It actually has volume on the last breakout. There's only, the 2 here, 1172.95, you're at 1173, so you're over it. All you have is the highs left. So again, we've got multiple breakouts, and that's even in the indexes, we have it multiple breakouts taking place in the sectors. So technically, market very strong. So bottom line is this thing can go higher, folks. There's nothing to stop it. So as hard as it is to embrace it, it is what it is, and we got to respect it, and we got to try to play with it. Is it overbought? Yeah. Can it pull back at any point? Yes. Is it going higher still? Probably. right? Even if you get some sort of a pullback here, would you be looking to buy the pullback? Yeah, everybody is, which means it's not going to be much of a pullback. So you have to think higher, and you have to participate on the higher side. If we look at what happened in the portfolio last week, remember I took the RWM out early in the week, part of it, and then the rest got stopped out. The Google exposure, we took some off on the bounce back to try to add it cheaper until this market pulls back. We're not going to add it cheaper. We got into that UUP. I didn't show the UUP, so let's take a look at this chart and see how it looks. So the UUP was coming up, and slowly, it looked to me like it was getting ready to break out. We actually bought that little dip on Thursday before Bank of Japan did their thing, and then of course this thing spiked up. It closed over the highs. It's suspect because it doesn't have enough volume. If I pull this over to the monthly, of course this is why I was looking at this chart, is because now we've got a monthly breakout. We got monthly, weekly, and daily breakouts. Dollar wants to go higher, folks, and if the dollar goes higher, at some point that's going to be a problem for others. But initially, this surge looks to continue. I don't see it stopping. So it's going to go after the next swing point high and then the next one. That next one's 23.43. We're trading at 23.09. I suspect we're going to see that fairly soon. And if it does get over this resistance zone, the next stop is the top. And that top is 25.84. That's another 10% on the way upside. So this could get quite a surge on the upside. So my expectation here is that if we do see, this push, consolidate and try to push higher, hold the retest regen off this bullish retest regen zone, then we're going to want to try to add to it. Or we're going to try to want to work short the other indexes that are getting hurt as a result of this. That's a dollar. If we look at the rest of the portfolio, AWK, they've got earnings coming out. This is our utility stock. Utilities, of course, have been doing well. This one has a projection of about 55, still heading up there. I suspect it's going to hit that target either before or as a result of earnings, and maybe that's where we take a little bit of it off. Right now, it's kind of hard to think about taking anything off until we put something else on. So we're going to have to work hard to put something on. ZLTQ, right, Aesthetics, they had their earnings. They couldn't break out over the high, but they're testing it with pretty good volume. I suspect it's just a matter of time before they break out. If we get a deeper retrace, we'll buy some more. If they just start to break out, then we'll try to buy a retest regen on a breakout. But we did add a little bit on the good earnings. Facebook earnings weren't as hot. They got sold off as a result. Facebook, we're going to try to buy them cheaper down in this area. I suspect, when the market finally gets a pullback, we'll be able to do that. And then Google, we actually sold out some of the Google on this bounce after an earnings disappointment here. But Google looks like it's going to come back in and retest regen off these lows, bearish. And at some point when it does, then we'll look to buy it. Right now, it actually has an ABCD structure to the upside. You get bad earnings, it doesn't matter. And you get an ABCD structure, you take you back into these lows. So Google, again, is something we'll want to try to add to. The thing this week that we should do is we should find strength. For example, if we look at the EWJ, we should find strength that should continue over time and try to buy any weakness in it. EWJ is an example. The DXJ is a currency neutral part of that. I suspect this is where we should try to play. Here's the retest regen. We should try to buy that. So you'll see some orders from me trying to do exactly what I'm suggesting here. Even as stretched as these things are, it's just what we have to do. And can we take a short-term hit as a result? Yeah. But if we wait any longer, we may get nothing. So I want to, we're only like 30% invested, so we need to put more exposure on. Good thing we're, long and making some money, but we're not exposed enough to what looks to be another surge over the next 3, 4, or 5 weeks. Okay? That's it for this week. I thank you for being there and for joining me. Have a great week, and I will pick this back up this week, and we'll play it by ear and try to make some trades to the long side. Have a great one. Thanks. Take care.